Daily Trader TV, it's the episode 33, it's the 28th of February 2018, and a question that came up a few weeks back is, what is the VIX? Just remember, I'm not qualified to give you advice on individual stocks. Don't follow me into trades, and trading involves risks that involve losing more than your initial stake. So, what is the VIX? So, the VIX is a volatility index, which is provided by the Chicago Board Options and Exchange. The VIX is the ticker symbol, or the EPIC, or I tend to call it the ticker. It's the ticker symbol for the Chicago Board Options Exchange volatility index product, and it's showing you the market expectations of the next 30 days volatility, and it's constructed using the implied volatilities of S&P index options, and the volatility is meant to be forward looking, so it's calculated from both calls and puts. Most people are using it as a broad measure of market risk, or what sometimes you'll hear on the talking head programs as investor fear gauge. So it's kind of like they describe it as a measure of fear. So let's have a look at a VIX chart. So this is year to date for the VIX, and you can see how we were pretty stable until February the 2nd, and then February the 3rd, 5th and 6th we get a big spike, and it started to settle back down. And if we have a look at what the S&P did during that period, so February the 6th, so we can see that we had a big move down during that period where the VIX spiked, which is completely normal because it's expressing the expectations of investors in the market for the coming days, weeks, based on call and put options. So, how useful is it? Not very. I mean, you can see here that it's most of the move has been made by the time people are getting fearful. When volatility rises, for me, I just sit back. Well, you saw what I did in the account. I started to switch off swing trades and sat back into and relaxed into the other positions and just allowed the volatility to play itself out. So we go back to the VIX chart just to give you some comparison. If we go back 10 years, you can see how in the financial crisis in 08, we got as high as $89 on the VIX, and we've not got back to those levels, although we have clearly had some periods of volatility along the way. We've had next to no volatility over the last year. So volatility is always just on the horizon. You never know when it's going to come back. But you can see we've had a long run of low volatility, which is everybody's style's different. But for me, low volatility is a good trading environment for the way I trade. I don't mind volatility coming back. It's not something that affects me too much. But I wouldn't be opening new swing trades. I'm not I'm not that style of trader. So anyway, that answers the question, what is a VIX? You now know what the VIX is. It's a fear gauge. And you now know where you can go and look at it for yourself.